In this video, I am going to discuss about CIMA Code of Ethics. This topic is really important, not just for your CIMA exams, but also after completing your CIMA exams and joining your professional career in the business world. So pay close attention to this video and have an understanding about the CIMA Code of Ethics. There are five fundamental principles CIMA has introduced to its students, members to comply with in all professional and business relationships. The code is designed to uphold the highest standards of ethical and professional conduct, and it applies to all members and students regardless of their location or the nature of their work. These are the five fundamental principles of CIMA Code of Ethics: integrity, objectivity, professional competency and due care, confidentiality, professional behavior. Please remember these five fundamental principles. Now let's discuss about these fundamental principles one by one. Integrity. This principle requires CIMA members and students to behave in a manner that is honest, straightforward, truthful, and consistent with their professional and ethical obligations. Because the integrity is the combination of honest, straightforward, truthful, and consistent. This means avoiding any conduct that could bring discredit to the profession or compromise their independence and objectivity. As an example, a CIMA member working as a finance manager at a company should not manipulate financial data to achieve personal gain or benefit the company's stakeholders at the expense of its shareholders. CIMA members and students should always comply with the CIMA Code of Ethics when it comes to professional and business activities. The second fundamental principle, objectivity. This principle requires CIMA members and students to maintain an unbiased, independent, and impartial attitude in all their professional and business judgments. Objectivity is a combination of these terms: being unbiased, being independent, and having impartial attitude. They must avoid any conflicts of interest or personal biases that might influence their objectivity or professional judgment. We will discuss about conflicts of interest later in this video. What is objectivity? Objectivity is where, based on the facts, let's say there are two investments, investment A, investment B. Investment A has a NPV of, let's say, 2 million. Investment B has a NPV of 0.5 million. If we look at these projects objectively, project A will produce the highest NPV and project B will produce the next highest NPV. So objectively, we select the project A. Let's say project B will benefit your family member. Let's say this will involve your brother-in-law's company. If you are not objective, you will select the option B instead of option A because you are not objective, you are subjective. The reason for your subjectivity is that option B will benefit your family member. So, when it comes to professional and business judgments, you cannot be subjective. You have to be objective, which means you have to based on the facts. For an example, a CIMA member working as an auditor should remain independent and impartial when evaluating the financial statements of a client, even if the client is a close friend or family member. As I explained earlier, you have to be objective when it comes to professional and business judgments. The third fundamental principle of CIMA Code of Ethics, professional competency and due care. This principle requires CIMA members and students to maintain their professional knowledge and skills and exercise due care in all aspects of their work. They must stay up to date with the latest developments in their field and apply their knowledge and skills with due care and diligence. For an example, a CIMA member working as a management accountant should stay informed about the latest industry trends and best practices and apply them to improve the financial performance of their organization. Due care means as a professional, you have to maintain a healthy relationship with your employers, employees, and your clients. The fourth fundamental principle, confidentiality. This principle requires CIMA members and students to protect the confidentiality of information acquired in the course of their work, except when legally required to disclose it. This is really important. As a management accountant or as a finance employee, you have access to confidential information within an organization. You should not disclose this confidential information unless it is a legal requirement. We will discuss about these legal requirements in the next slide. For now, just remember you have to maintain confidentiality of the information of your clients, your employer in the context of professional and business activities. They must ensure that confidential information is not used for personal gain or disclosed to unauthorized parties. For an example, a CIMA member working as a financial analyst should not disclose confidential information about a company's financial performance to a competitor or use it for personal gain. It is really important to note that breaching confidentiality is a serious matter and should only be done in exceptional circumstances where there is a legal or ethical obligation to do so. CIMA members and students should always seek guidance from their professional body or legal counsel before disclosing confidential information. These are the instances where you can disclose confidential information legally and ethically. Other than these instances, you cannot disclose the confidential information to third parties. If it is a legal requirement, you can disclose the confidential information. If it is a professional duty, you can also disclose the confidential information. If you have the consent from your client or from your employer, you can disclose the information. And finally, if the information is for the public interest, you can disclose the confidential information. This is also known as whistleblowing. This is where employees in an organization disclose the confidential information to the public for the public interest. In these cases, individuals cannot disclose the confidential information for their personal gains. The final fundamental principle of CIMA Code of Ethics, professional behavior. This principle requires CIMA members and students to avoid any behavior that might discredit the profession, including discrimination, harassment, and bribery. They must maintain a professional and respectful attitude towards their colleagues, clients, and the public and avoid engaging in any behavior that might undermine the reputation and integrity of the profession. As an example, a CIMA member should not engage in discriminatory or harassing behavior towards their colleagues or clients. You have to maintain the reputation and the integrity of the profession. As a final thought, all CIMA members and students are required to comply with the CIMA Code of Ethics, and failure to do so can result in disciplinary action. The code is regularly reviewed and updated to ensure that it remains relevant and effective in promoting ethical behavior in the profession. Now let's discuss about the common threats to CIMA Code of Ethics. There are instances where the fundamental principles of CIMA Code of Ethics may be in conflict with. These instances are called threats to the CIMA Code of Ethics. These are the most common threats to the CIMA Code of Ethics. Self-interest threat, self-review threat, familiarity threat, intimidation threat, advocacy threat. Let's discuss about these threats one by one. Self-interest threat. A self-interest threat occurs when a CIMA member or student's personal interest or relationship influences their professional judgment or behavior. This can create a conflict of interest and compromise the objectivity and integrity of the individual. So basically, the integrity and the objectivity will be compromised when there is self interest threat. For an example, accepting bribery from a supplier so that the orders will be given to them, even though quality of the supplies are not up to the requirement of the company. Here what happens is you will get the benefit from the bribery, but your company will be impacted negatively because of this action, because the quality of the supplies are not up to the requirement, which means the reputation of the company will be in danger and the waste of the products will also increase because of the low quality. This is the self interest trade, where the individuals put their self interest before the best interest of the employer or the client. If there is a potential conflict of interest, you can disclose the necessary information to the related parties in advance to avoid self interest trade and act accordingly. Disclosing the necessary information in advance to the related parties is very important. This will help you to safeguard the self interest trade. Self review trade. A self review threat occurs when an accountant or auditor is required to review their own work, such as when they are responsible for auditing financial statements that they prepare or when they are involved in making decisions that affects their own interest or those of their employer. Let me give you a simple example. Let's say you sit for a CIMA exam, and after the exam, your paper will be given to you and the answers will be also given to you. What you have to do is you have to mark your own paper. What will happen? There will be a self review thread because now you are reviewing your own work. There will be students who will mark their papers honestly, but there will be also students who will not do so. For an example, a report which you have prepared is given to you to review. You find an error in this report, but you decide not to disclose. Because of the self interest, you will not report this error. This is a self review threat. To mitigate this self review threat, you should disclose the error to your supervisor or an independent third party and seek their input and guidance on how to proceed. You can, instead of marking your own paper, you can give the paper to somebody else to mark so that the self review threat will be eliminated. These are the safeguards to remove the self review threat. Familiarity threat. Familiarity threats can occur when an accountant or auditor becomes too familiar with the client or a particular industry and as a result loses their objectivity and independence. We discussed about the objectivity and independence. This is where you should be unbiased or you should be independent. For an example, when an auditor has a long standing relationship with a client or when an accountant has worked in the same industry for many years. To mitigate familiarity threats, it is important for individuals and organizations to maintain professional skepticism and objectivity and to ensure that they are independent and impartial in their decision making. This may involve taking steps to limit the length and scope of relationships with clients or industries, rotating personnel on assignments, or seeking guidance from an independent third party. These are the safeguards to minimize the familiarity threat. Intimidation threat. Intimidation threats can occur when an accountant or auditor is threatened with harm or punishment by a client or employer if they do not comply with their demands or expectations. For an example, an auditor may be threatened with termination or legal action if they do not overlook certain issues or approve a financial statement that is not accurate. Intimidation threats can also occur when an individual or organization is pressured or pushed into making a decision that is not in their best interest or is unethical. To mitigate intimidation threats, it is important for individuals and organizations to maintain their independence, objectivity, and integrity, and to stand up for what is ethical and right, even in the face of intimidation or pressure. This may involve seeking support from colleagues or professional bodies or taking legal action if necessary. Let's assume you are working as a management accountant of a company. There is an opportunity in the company for a promotion. You are certain that you will get that promotion because you are competent in the work you are doing. Your supervisor comes in and asks to do some unethical activity. Now there is a pressure or the intimidation from the supervisor. Even though this is not physical, you will be threatened because now you know if you reject this request from your supervisor, you will not be able to get the promotion because the supervisor is indirectly pressuring you. This is also known as intimidation threat. Advocacy threat. Advocacy threats can occur when an accountant or a professional becomes too closely aligned with a particular client or stakeholder and as a result becomes an advocate for their position or interest rather than maintaining a neutral and objective stance. For an example, when an accountant provides consulting services to a client and becomes too invested in promoting their interests rather than focusing on the professional obligations to provide accurate and objective information. Advocacy threats can also occur when an individual or organization becomes too invested in a particular viewpoint or ideology and as a result becomes unwilling to consider alternative perspectives or evidence. Let me give you an example. Let's say you are working in a company which is in the food and beverages industry. Let's say they are evaluating two new products to launch. One product is totally based on plants. This is a plant-based product. And the other product is based on dairy, which is milk. Now let's say you are a vegetarian. As a management accountant, you evaluate these two investments. Let's say you conduct NPV analysis. Let's say plant-based product has a positive NPV valuation and the milk-based product is also have a positive NPV valuation. But the milk-based product has the highest NPV valuation. Since you are a vegetarian, which means you are not consuming animal products. Now there can be a advocacy threat because even though the milk product has the highest NPV, you might be biased to go ahead with the plant-based product because you are advocating for plant-based products. This is not objective. If you are objective, you have to select the milk-based product because this has the highest NPV value. Because of your viewpoint or the ideology, you will select the plant-based product, which is not objective. This is known as the advocacy threat. There can be two types of advocacy: advocacy for or advocacy against. In this case, you are advocating for the plant based product and you are advocating against the milk based product. When it comes to professional and business activities, advocacy threat should be eliminated, which means you have to be objective in all professional and business activities. To mitigate advocacy threats, it is important for individuals and organizations to maintain their independence, objectivity, and integrity, and to ensure that they are not promoting a particular point of view or position to the extent that is compromises their professional obligations. Thank you for watching. See you in the next video.